Welcome back to CoinVantage. Today we're diving into global finance trends. Whether you're a seasoned investor or a newcomer, our simple breakdowns have got you covered. Hit subscribe for straightforward updates. Let's get right into it. BlackRock stands out as a major player in the financial world, managing a whopping $9 trillion in assets, making it the largest investor globally. To put it in perspective, this massive sum represents about a tenth of the world's annual economic activity. The significance of this vast wealth lies in the substantial influence that BlackRock's money managers wield over global affairs. CEO Larry Fink, during a 2021 CNBC interview, emphasized BlackRock's long-standing presence spanning over 22 years, both as a public and private corporation. Fink's insights on retirement have been a frequent feature on the show. BlackRock's influence extends to owning at least 5% of almost every large American company, granting the firm considerable voting power in shaping the direction of publicly traded companies. Since its IPO in 1999, BlackRock stock has soared by an impressive 7,539%, solidifying its position as a leading financial institution. This success is attributed to the strategic use of technology to mitigate investment risks at various stages. The company, along with another ETF provider, has excelled in offering investor cost-effective portfolio diversity. BlackRock's journey to becoming a financial powerhouse began in the late 80s, with its formation as part of the Blackstone Investment Group, co-founded by Larry Fink and 7 others. The company gained momentum and eventually acquired Merrill Lynch's troubled assets in 2006, followed by the purchase of Barclays Global Investors in 2009. One of BlackRock's key achievements is the development of Aladdin, a sophisticated risk management software. Using a Monte Carlo algorithm, Aladdin assesses potential investment risks, adapting the evolving complexity of financial markets. The company's tech-driven strategy and strategic acquisitions have propelled it to the forefront of the financial sector. Exchange-traded funds are the core of BlackRock's business model, with daily trading volumes for its S&P 500 index fund reaching around 3 million shares. ETFs have become a dominant force in investing over the past decade, with BlackRock's offerings such as the S&P 500 ETF providing a cost-effective means of accessing diverse portfolios. For instance, BlackRock charges 30 cents annually for every $1,000 invested in its S&P 500 ETF, showcasing the affordability of this investment option. In essence, BlackRock's impact on global finance, its tech-driven approach, and the popularity of its ETFs underscore its role as a pivotal player in shaping the contemporary financial landscape. Fund providers fiercely compete to offer competitive rates, benefiting investors significantly. In the realm of exchange-traded funds, only 3 companies wield real influence. BlackRock dominates with over 35% of the American market, followed closely by State Street and Vanguard, capturing a combined 15 to 20%. ETFs have swiftly revolutionized finance, with one of the major players attracting over 80% of assets invested by legal experts, as reported by the National Bureau of Economic Research. Experts highlight the potential for mergers and acquisitions in the banking and technology industries due to the similarity of their portfolios, resulting in similar risk and return characteristics. For investors, selecting the fund with the lowest price, often the largest fund due to economics of scale, is a sensible choice. BlackRock's prominence has surged with the rise of interest in passive investing. Besides managing sovereign wealth funds, private equity is rapidly expanding in BlackRock portfolio as it extends loans to emerging markets globally, with the majority of BlackRock's income, 78%, coming from advising fees, particularly from products like ETFs. The firm continues to draw attention. Clients increasingly seek sustainable portfolios, reflecting a growing awareness of environmental, social, and governance factors. BlackRock aims to position itself as a socially aware voice in finance, emphasizing ESG considerations, including climate change, board diversity, and overall governance. While active management may not guarantee superior performance compared to broad market indices, companies aligning with investors' beliefs use this shared vision as a selling point. BlackRock acknowledges that societal issues may impact profitability, as seen in its involvement with ExxonMobil, holding 6.7% of ExxonMobil shares. BlackRock engaged in climate-related discussions at shareholder meetings, contributing to the removal of 3 board members in 2021. This reflects a broader shift in capitalism towards ESG considerations, even if it means sacrificing some immediate revenues for potential long-term gains. Exxon's commitment to end frequent natural gas flaring by 2030 showcases the influence of climate concerns. However, the challenges lie in balancing stricter restrictions on public companies with potential oversight gaps in the privatization of polluting operations. It's worth noting that even BlackRock, with investments across the entire S&P 500, faces challenges in providing a comprehensive analysis of fossil fuel production. State-controlled businesses emerge as a major polluter and fossil fuel producer, often disregarding the demands of American hedge funds. The global shift towards green initiatives, recognized by BlackRock, could potentially trigger political turmoil and price hikes. Larger corporations and banks are adopting rules akin to admissions officers severing ties or denying loans to enterprises, particularly smaller ones that have not reduced their emissions. This unintended consequence might escalate anti-big business sentiment and perpetuate a narrative pitting large firms against smaller counterparts, intensifying political divisions. BlackRock took an early stance on social responsibility within the European Union, participating in the group's framework for substantial investments. The United States government is also concerned about climate change, addressing climate-related financial risks through bank regulation and financial stability preservation. Their plan emphasizes transparent accountability, extensive public involvement, and comprehensive research. In times of financial crisis, the Federal Reserve has turned to BlackRock for assistance. Dating back to the 2008 financial crisis, BlackRock managed distressed assets for AIG and Bear Stearns. During the initial phase of COVID-19 pandemic, the Federal Reserve again sought BlackRock's expertise in supervising the acquisition of trillions of dollars in assets, including corporate bonds. Concerns arise among industry observers about potential conflicts of interest stemming from BlackRock's relationship with the Federal Reserve. The company's significance may prompt increased oversight, as indicated in its 2020 annual report. Ongoing reviews by the Federal Trade Commission and investigations by the Securities and Exchange Commission into a merger and acquisition rules and derivatives markets, respectively, could impact BlackRock. Exploring new profit avenues, BlackRock delves into real estate investments in various sectors, from apartment complexes to retail centers and office buildings, while dismissing its foray into Bitcoin as miner. The company establishes an artificial intelligence lab in Palo Alto, Global Client Interaction Center on climate risk and portfolio management, steering away from discussions on deficits and inflation risk. The trust placed in BlackRock's leadership allows the company to maintain a long-term perspective, overseeing assets valued at billions of dollars. Efficient and affordable scaling is facilitated by the right technology. However, the success of environmental, social, and governance policies remains uncertain. The Securities and Exchange Commission, along with all investor funds, should prioritize investor protection. Whether ESG factors contribute to this global remains unclear, and merely asserting that ESG aids portfolio companies do not sustainable in its efficiency. Thanks for diving into the world of finance with us. For more easy-to-follow updates on market trends, subscribe to our channel CoinVantage. Keep learning and stay ahead of the game.